Hey everybody, thank you for joining. We're just going to give everybody a couple of minutes to join the presentation. I know some people were leaving other presentations and moving on to this one, so we'll just give them a couple minutes. Okay, let's go ahead and get started. I just want to thank you all for tuning in, and I just want to start off by saying thank you so much to Tati for allowing me the opportunity to be a part of this event today. I'm truly honored. My name is Maya Miles, and I'm here today to speak about the progression of wealth in Black women. This presentation is powered by Rutledge Financial Partners, which is an independent Black-owned wealth based out of Matthews, North Carolina, which is a suburb of Charlotte. And if you see me kind of going back and forth, the setup is weird. I have to kind of get used to it. My presentation's on one side, notes and video are on the other. So without further ado, we will get started. So here's our agenda for this presentation, starting with part 1, where we started, part 2, where we are now, and part 3, where we are going and how to get there. I want to preface this by saying we will spend most of our time on part 3. Nonetheless, it is important to be knowledgeable of our history and our current state within parts 1 and 2. Before we get started, I want to encourage you all to jot down any questions you have and emailing them to me or putting them in the chat along with your email, just in the interest of time because we only have 30 minutes. I just want to field you guys' questions outside of the presentation, if that is fine. So we're going to start with where we started. Unfortunately, there are countless numbers of issues that have limited Black women's ability to build wealth over time. I just wanted to highlight 6 here on the slide. I put this first bubble here because it currently is, and will continue to be one of our biggest roadblocks. As we all know, Black women are at a disadvantage due to systemic racism and gender-based discrimination, which has impacted our lives so much and has created a domino effect for the other 5 bubbles on the screen. So second, I want to go into history of lower wages. As the number of Black women joining the workforce has increased, the labor market has made little progress in eliminating gender and race-based disparities in wages and employment opportunity, which ultimately has impacted our earnings and wealth. Third, I want to go into financial illiteracy. Because of our history of lower wages, it has been difficult to build a knowledge of finance. Basically, because of the lower wages, we haven't had money. So therefore, there hasn't been finances to manage in the past. So financial literacy hasn't been a priority to us because of all of the other things. So fourth, motherhood commitments. The economic impact that motherhood has had on wealth are pretty straightforward and simple for Black women. When we bear children, we must take time during the first few weeks and months to take care of our babies, to heal ourselves and readjust to life. Then after all of that, we have to return back to work, which most of the time means that we have to send our babies to daycare. Anyone that has children now knows that daycare isn't cheap. I've talked to so many women that basically say that they're paying the same price as a mortgage for daycare, which is insane to me. I don't have children, so it's kind of hard for me to imagine that. But I mean, I've talked to many women and they say that daycare is not cheap. So overall, this impacts our finances. So bubble number 5, emotional ties to spending. As Black women, some of us are coming from backgrounds where our mothers, grandmothers, great-grandmothers have struggled with finances, which has an emotional impact on us as spenders. To be completely transparent with you all, I was not handed down generational wealth. So when I first got my big girl job, my desires to spend were very intense. I could now afford all the things that I couldn't before, and that had impacted my finances. I know a lot of you ladies can agree with me on that. So last bubble number 6, lack of financial freedom. I want to preface this by saying that this doesn't apply to everyone's family history because my paternal grandmother worked, but it used to be normal for women to stay at home and work and take care of children while their husbands worked. This has had an impact on our history and wealth because we were not allowed to control finances and make decisions on how money was spent, basically because we didn't have a hand on actually going out and making the money. Actually, before 1974, with the passage of the Equal Credit Opportunity Act, many banks still would not issue women credit cards or allow them to open up bank accounts without husband's permission. So that has had an impact on our history and our finances. Women couldn't even obtain mortgages or get business loans until 1974 without a male cosigner. So like I said, these are just 6 bullet points that I wanted to highlight. There are so many more that have impacted our finances, but we're going to move on to where we currently are now as far as Black women and wealth. And we will start with a polling question. Polling question number 1, what is the median wealth of a single Black woman? So I think there's a polling feature. Yes, looks like you guys are using it. I'll give you guys about a minute to put in your answers. All right. So if you said letter C, $100, you are correct. Based on congressional hearing titled Examining the Racial and Gender Wealth Gap in America, presented in September 2019, single Black women have a median wealth of $100, while their same race male counterparts, Black men, have $7,900. And then the median wealth of single white women is $41,000. To put it in another way, single Black women have 1 penny of wealth to every dollar of wealth owned by their male counterparts and have a tiny fraction of a penny for every dollar of wealth owned by a Black woman, by a white woman. So the next fact I want to highlight is in regards to earnings. In 2012, African-American women earned 64% of white men's wages compared to 78% for white women. And in regards to spending, the last bullet point, based on research collected by University of Pennsylvania's Wharton School of Business from 1986 to 2002 for the Consumer Expenditure Survey conducted by the Federal Bureau of Labor and Statistics. Black and Hispanic Americans spend up to 30% more than white Americans who have comparable income on visible goods such as clothing, cars, and jewelry. This means that compared to white households of similar income, the typical Black and Hispanic households spend $2,300 more on visible items. To do that, they spend less on all other categories except for housing, and they save less. So that's just a small snapshot of where we are now. I don't want to go too in depth with that just because we are currently experiencing this, and I want to spend more time on where we're going as Black women. So now that I've talked about where we started and where we are now, I'm going to deep dive into where we are going. And I want to do the second polling question. Do you feel confident enough in your financial expertise to manage your own finances? And this is basically a gauge question. I just want to see where the audience is at. In no means don't feel the need to be a financial expert. I just am kind of curious. I'll give you guys a second to answer. All righty. Thank you for answering. So that will bring us to where we are going and how are we going to get there. So we're going to take a journey by starting with the things that we can control. We're going to take a journey to higher paying jobs, confronting spending habits, normalizing saving and investing, building generational wealth, increasing knowledge of our finances, and becoming a financial champion for one another. And I'll highlight all these in deep dive in for all of them. So first, higher paying jobs. As I stated before, we are coming from a history of low wages, which has made it harder for us to build wealth. I think as Black women, we are doing an amazing job with really finding our ground with this by abandoning the whole I'm just happy to have a job attitude and moving towards negotiating our salaries for what we're worth, and realizing when you are no longer benefiting from an employer, making the moves to switch jobs and not staying forever and not staying loyal to companies, maybe how our mothers or grandmothers would have acted towards companies. So just with saying that, we just need to continue that energy and never settle when it comes to salaries, knowing your market rate as far as salaries, what you're worth, and always striving towards that. So confronting spending habits is our next slide. If you can remember back a couple slides, when I mentioned that we are emotional spenders, and that is tied to not having it. And when we finally have the money, we spend it on things that we never had, which has had a huge wealth impact on Black women. I would argue that confronting spending habits is more important than working towards higher earnings, because with higher earnings, it won't attribute much to wealth if we are spending and not saving and investing. So through compiling this presentation, I learned a couple things. A, that the Black buying power continues to grow from 320 billion in 1990 to 1.3 trillion in 2018. So that was just a couple years ago. And another thing I learned is advertising companies are fully aware of how Black Americans love media and to how they spend money. So they specifically target us because they know that we will spend money. You're probably asking yourself, how do we confront the spending issue? And I really believe that this starts with establishing your financial goals. If you have financial goals, I believe that spending is much more deliberate, as in, do I need this watch or purse? And how will this purchase impact my financial goals? I know for myself, two of my biggest financial goals is to A, be more deliberate with purchases in regards to my home, and two, saving for my forever home. I have found that these two are very conflicting. My husband and I currently live in a home that is not technically our forever home, so it's more of a starter home. And even knowing that it's a starter home has not stopped me in the past from spending large amounts of money on a home that I will not live in forever. So it wasn't until I had a hard talk with my financial advisor when I realized that for me to reach my financial goal of having my forever home, I need to stop spending thousands of dollars on my starter home. So you can kind of see by my story where spending habits need to be confronted in order for you to stay true to your financial goals. So we will move on to normalizing saving and investing. What I mean by this is that we need to make our financial position a part of our everyday conversation within our communities, our families, and friends. It would be great to get to a position where we are bragging on ourselves and gassing up each other about how financially educated we are, what stocks we own, and ultimately how financially free we are. Just as much as we brag and gas each other up for buying luxury bags, clothes, and cars. So again, the question of the day is, how do we get there? So number one, the goal is to ensure that your salary is what you are worth, like I said before in previous slides, and two, confronting and controlling spending habits. So you get to a point where you have access to money to save and invest, as we mentioned before as well. So once you have those two ducks in a row, you are ready to save. So first is earnings, second is spending, and then you are ready to save. So when thinking about saving, there are three main places to put your money. A, the bank, B, within insurance, and C, within investments. So as a rule of thumb, the goal is to have $0 in credit card debt. And I know that is so hard. It is even hard for me. It's just so easy to spend on your credit card. But it's important to know that $0 of credit card debt is ideal. And then saving 3 to 6 months of expenses in the bank for small emergencies. So 3 months, saving 3 months of expenses is ideal for someone who is in a two-person income situation, i.e. you're married or you have a roommate, and 6 months of expenses is ideal for those who are single with one source of income. Then when we look at bucket B, insurance, when talking about insurance, whether that is home, auto, health, life, disability, it is important to know that insurance plays an important role for bigger emergencies and protects you from coming out of pocket within that 3 to 6 months of expenses in the bank. As you may all know, that's how insurance works. So C, investments, saving 3 to 6 months worth of expenses and having adequate insurance creates a safety net for you to be able to put that money in investments and not have to worry about pulling from your investments in the event of emergencies. Then when you have all three of those ducks in a row, earnings, spending, and saving, you're ready to invest. Let's go over some basic types for your understanding. Stocks, bonds, mutual funds, and exchange traded funds, which are ETFs. I don't want to get too technical and in the weeds, so I am just going to breeze through these. Again, if you guys have questions, please feel free to put them in the chat along with your email, and I will have my contact information and a representative from Rutledge Financial Partners, their email at the end, so you guys can contact them. So stocks are equity or ownership of a company, and the price of a stock fluctuates based on investor confidence or lack thereof. Bonds are fixed income investments. You essentially loan an entity money in exchange for interest and return of capital. Return of principal, sorry. A mutual fund is a professionally managed fund that pools other people's funds together to purchase securities. And then ETFs, exchange traded funds, are an investment fund traded on the stock exchange, much like stocks. ETFs hold assets such as stocks, commodities, and bonds. ETFs prices fluctuate all day, unlike mutual funds, which are priced once a day after market closes. So these are just, again, a few basic type of investments, and there are so many more with different advantages and disadvantages that align with your financial journey. But for the sake of time today, we won't get too technical and in the weeds, like I said. So once we have our 4 ducks in a row, earning, spending, saving, and investing, we can then transition to building generational wealth. I want to preface this by saying that building generational wealth is not a part of everyone's financial plans. You are all probably thinking, who would not want to build generational wealth? You would honestly be surprised by the amount of Black Americans who have the mentality that they have given their children enough by raising them and supporting them throughout their life that they don't want to leave behind anything else. They don't want to give them any more. And to that, I say it is a personal preference and there's no judgment. However, for those who have building generational wealth on their financial goals, here is how to make it happen. So first, it's important to understand, what does building generational wealth mean? It means either passing down your own wealth or investing in your children, nieces, nephews, in order to create a stable foundation for their success. I know I speak for a lot of you when I say that my current financial position would be completely different if A, I didn't have to pay for college, or B, I was passed down a lump sum of money to start my life after college, or given a car, or given a home, or anything like that, which is a part of building generational wealth. So how do we start building that wealth? First, you have to make sure that your own finances are in order so you can start putting extra money away for others. If yours isn't right, then you cannot start with others. So really it starts with you. Then it is important to know what are all the options out there for you, whether that is a uniform transfers to minor, abbreviated UTMA account, which allows an individual to put away money into an investment account that will grow in line with the market. And at a designated age, this is based on whatever state you're living in. For North Carolina, the age is 21. Those funds that you've invested will be appointed to your loved one, whether it's your child, your niece, or nephew. And that will be a lump sum of money that they get to kind of start building their life with. One thing to know, it can be up to you how, as the investor, how you want the loved one to spend the money, whether that's on school, whether that's on property, whether that's on paying down debt, anything like that, or you can kind of give them free rein on how to use that. Another option is a 529 plan, which is a savings plan designated to encourage saving for the future education costs. Note with a 529 plan, you can only spend the money on education, trade schools, private school, K through 12. So that's just kind of a difference. I know for my husband and I, we do not have children right now. However, we do put money into our nephew's accounts. I think it's $50 a paycheck. So we put that in the market and it will grow until they are 21 because we are in North Carolina. And basically they will get that when they turn 21 to start their life. So then there is life insurance, which is arguably the easiest and simplest way to build generational wealth. When we talk about life insurance, it's important to understand what it means to A, have life insurance, B, the difference between owning life insurance versus being covered through work, C, what a permanent policy is and a term life policy is. And then it is important to understand how to designate your beneficiaries. So A, if you're covered under a life insurance policy and you die, you are ensuring that your bills and liabilities are not being passed off as a burden to your family and children. Depending on and that is depending on the amount of your coverage. Life insurance needs vary depending on individual situations. My life insurance coverage is different from somebody who doesn't own a home or who doesn't have student loan debt. So in most instances, there's a lot of value of owning life insurance. Then it is important to understand the concept of owning life insurance versus being covered through a policy through work. When you own a life insurance policy, it is portable with you from job to job. It doesn't stop no matter what. And your personal insurability is locked in with that age. And what I mean by personal insurability is that if I were to go out and get a life insurance policy today, I'm locking in my premium, which is the amount that I pay for my life insurance, based on my age today, which is 27, my weight, which is X number of pounds, and my health, which I am relatively healthy. I am a little bit overweight, but so I'm locking that in. And life insurance premiums work in a couple of different ways, and they're usually based on your height, weight, health, and age. So my premium is lower than somebody who is 56, overweight, and not healthy, because they're basically different. And that's why it's important to lock in your rate when you are younger. You have the advantage of your youth in locking down that rate. So then when you have life insurance through work, you will usually lose that coverage when you leave your employer. So it doesn't, if you're covered under job A and you leave to go to job B, you no longer have life insurance. And also you can't lock in that future insurability that we talked about through a group policy at work. So next, it is important to understand what a term policy is versus a permanent policy. A term policy gives you coverage for a certain amount of years. It does not have cash value, so it's not an asset, and usually gives you conversion privileges to convert to a permanent policy in the future, which is good. Permanent policies such as whole or universal life insurance are more expensive month to month, because you are basically like locking down a longer period of time. It's permanent. But they grow as an asset with cash value, which is good. The cash value is an account that you could withdraw from as a loan in the future in case of emergencies. So that's kind of the pros and cons of term policies versus permanent policies. And again, I know I'm just breezing through this, but for the sake of time, I just want you guys to jot down questions, email me, please. And then lastly, remember to check your beneficiaries and make changes when necessary. For example, my mom and sister were my beneficiaries before I got married. However, now that I have joint assets with my husband, I switched him to the beneficiary just in case anything happened to me. He'll have money to pay off any of our debts. So those are just a few ways that you can build generational wealth. And again, for the sake of time, we'll just hit on those few. Let's see. Okay, so next is increasing knowledge of our finances. I think we as Black women would benefit from understanding what we are doing with our finances and why we are doing it. So how do we get there? Question of the day. One, taking finances in bite-sized pieces and knowing where you are in your financial journey to financial freedom. Whether that is having a tough conversation with your employer about earnings, tracking expenses, looking at your benefits and what you are currently enrolled in through your job, or sitting down and taking a look at your 401k portfolio. Whatever that is, I highly suggest you slow down because it can be extremely overwhelming. Secondly, I will say knowing when to reach out to a professional. We rely on professionals to take care of us medically, and we rely on professionals to do our hair, do our nails. So I think it's important to know when we need to lean on a professional, when we need financial help, and when we are financially sick. So that means kind of reaching out to an advisor, reaching out to somebody who knows about finances. So I'll quickly, in the interest of time, go to the next slide. So our last point is becoming a financial champion for one another. So what does this mean? Once we have gotten to a place where we earn what we are worth, we have control over our spending, we have our savings in order, we are investing, we are pouring into generational wealth, and we are knowledgeable about our finances, we can become an advocate for other Black women and their financial journeys. I don't know about you all, but there is nothing warmer and more welcoming than having another Black woman who supports you and wants to see you be your best self. With this, I would just say, in the Black community, we need transparency and information sharing, which will ultimately help us grow. So with that, I just want to say thank you so much for hanging in there with me. I know it is towards the end of the day on a Saturday. Nonetheless, I loved being here and talking with you all about our wealth journey. I could do this all day. I know that I only touched on the tip of the iceberg on a lot of these topics, and I went through them really quickly, but for the interest of time. But please, again, feel free to contact myself or Nicholas, who is a wealth advisor with Rutledge Financial Partners, as I mentioned before. And they are a Black-owned wealth management firm and is one of the official sponsors for Gratitude for Black Girls, and who also sponsored this presentation. So thank you guys so much. I hope you guys have a great rest of your day.